Hello, what is going on, everyone? Hey, it's Chris Payne over at Keller Williams Realty. Want to bring in my good friend Tracy Schmidt from Supreme Lending. How are you?
Hi, Chris. How are you?
I'm fantastic. Thank you so
Good.
much for being here.
Thank you for having
Uh,
me.
Oh, awesome, awesome. Well, what I wanted to do is I wanted to bring you on so that way we could um, discuss what happened yesterday. So the Federal Reserve, 0.75% rate hike, and what that will ultimately end up mean for mortgage. It doesn't mean that the rate went up 0.75%. It just means it's going to have an effect on mortgages and for those people who are wanting to buy a home. So let's talk a little bit about that.
Yeah, so and I sent you a quick video today because I had a chance to talk to some people within our company to really just kind of gauge what's been happening because it's been a crazy 48 hours.
Right.
So the Fed, their job really is to make sure that an inflation rate stays between 2 and 4%, right? So last week when that data came out, it came out at 8.1%. So
Mhm.
definitely higher than anticipated and expected. So that had a direct relation to increasing the percentage of what it costs banks to borrow money, right?
Mhm.
So
Mhm.
that in turn affects interest rates. So the 75 basis point hike truly is 0.75% to the rate. So I went into a file. Actually, you know the guys that were helping sell and purchase a home. I
Yep.
looked at their rate 8 days ago, and to get the rate of 5.75, which they were getting, they were buying that down with a cost of about $5,000. At that
Wow.
same cost today, they're going to get 6.25. That same borrower locking in 8 days later would go from 5.75 to 6.25. So that's about a 0.5% increase over the last 8 days. If they kept the same rate of 5.75, their cost would have gone up over $13,000 compared to
Wow.
2000. So it has already hit. They're anticipating another announcement next week, and there will be another rate increase between, they're saying, 0.5% and another 0.75% next week as well.
Oh, wow. So how high do you think the rate could get? So right now you said it's at 6.25.
On average. So I like to
Okay.
tell people quoting rates is hard because everybody's
Mhm.
circumstance is different, right? So
Mhm.
with this particular borrower, they're putting a lot of money down. Their FICO score is over a 700. They're buying a single family residence. So that actually helps the interest rate, right? When you're doing those things. So what they say is that the last year, the federal funds rate was at about 0.25%. And on average, interest rates are about 2.5% over that number, right? So
Right.
that makes sense. Last year, interest rates were at like 2.75. Okay.
Mhm.
So
Mhm.
right now, that rate is at 4%. So they're anticipating that by the end of the year, we're at like that 6.5 to 7% range. That's what they're saying. And then who knows, until inflation is back in line. And the reason why there's inflation is with COVID. It's the global economy. It's not just our economy, right? So there's other things that we can't necessarily control that are causing inflation. You've seen the price of gas. I mean,
Right.
it's crazy out there.
So I wanted to ask you, so I was having lunch today with a friend of mine who's an escrow officer, and she had heard that from other lenders out there that they're anticipating that in the fourth quarter the rates are going to go back down. Do you feel like the rates may go down by the end of the year? And part of what we were talking about is the fact that we have the midterm elections coming up, and will that have any sort of uh, leverage on the interest rate? I know the Fed isn't really tied to elections
Yeah.
per se, but it is a political thing right now. Inflation is a political thing.
Yeah, I mean, it could. There's so many factors that, I mean, look at COVID, right? No one was
Mhm.
anticipating a pandemic to last this long, and who knows what could happen? Who knows if another strain could come out? Who knows if we completely get it under control? Like, who knows if there is another war between Russia and Ukraine? I mean, all of those things that have happened that we can't control have had an impact on the economy and on rates.
Mhm.
I mean, I've asked the question because I'm trying to give hope to people as well. And the answer to me is no, don't anticipate them to go back down. If
Yeah.
anything, I think that they'd stay kind of where they are.
Mhm.
But I looked at a scenario today, where I was saying that same interest rate for that person would have gone up a 0.5%, it would have changed their payment $158 a month.
Mm.
So the number of the interest rate increase is scary, but I
Mhm.
say to talk to your loan officer, especially if you're pre-approved to buy a house and you're not locked in yet.
Yeah.
Have them reprice your scenario and see how much it's really changed your payment.
Mhm.
Might be surprised, even though 0.75% sounds like a lot, you're amortizing it over 30
30
years,
years.
right?
Yeah, and I think some people, what they don't understand is you can't actually lock a contract. You can't lock a loan until you've gotten a contract accepted.
Yeah, well, we at Supreme Lending, we have a program called a lock and look. And what that does is the pricing on the front end for a client is higher, but it allows them to lock in and look for a home for 30 days and then actually go into escrow in another 30 days. So it gives them a chance
Oh.
to lock in today's rates while they're looking. Now, if 60 days goes by and they don't find a home and their escrow isn't closed, you can do a one-time lock extension for an additional 30 days, right? Um,
Mhm.
and that all costs money. Um,
Mhm.
so we really would want to analyze, what would that cost be with the anticipation of what rates are going to be, and
Right.
could that change your payment to see if it's worth it for someone? But we can lock on a TBD property at Supreme Lending.
Oh,
Yeah.
good to know.
Yes.
Did
So,
not know this.
yeah.
So let's talk about what consumers should be doing now that the interest rate has gone up. I mean, one of the things that the experts are recommending, and I'm sure you would bless this advice, and that is to pay down high interest rate debt, like credit cards, for example.
Well, rates are changing on everything. I mean, credit card rates, student loan rates, car loan rates, mortgage
Mhm.
rates, it impacts anything that you're financing, really. So, I was having another call with an agent today, and I was letting people know. Let's say, for example, you have $100,000 and it's sitting in a checking or a savings account, right? You're
Mhm.
earning very little interest on that money by it sitting there. You
Right.
take the same $100,000 and you invest it into a home. Over the last 39 years in California, the average appreciation rate is 6.77%. Okay, annually. So you take
Mhm.
that 100 grand, not only do you have $100,000 sitting there, it's just in a different
Mhm.
place, which is a home,
Mhm.
also are earning appreciation, on that asset. And most people are turning around and, 2 to 5 years later, using that asset to help build financial wealth and buy second homes and rental properties. And so, I mean, paying off high credit card debt, of course, right? That's a good thing. But it's still a good thing to also invest in real estate when you can. Um,
And it's interesting that you mentioned that because I just shot a video last week where we were talking. In fact, I posted it today. I
okay.
think I posted it today on what the expert predictions were for equity increases over 2022, and Fannie and Freddie were saying it was going to be around 10%
Mhm.
over the year, but the Mortgage Bankers Association had put it at 6%. And then as you average them all out between
Yeah.
Zell and everybody, it averaged out to about 9% annually. So even though we are seeing these higher interest rates,
Mhm.
and the cost to borrow the money is actually going up, the rate at which your equity increases is greater than the interest rate that is increasing itself. So that's actually a good thing.
It is, yeah, especially where we are in California. I mean, averaging, and you have to realize, like I think I looked it up today. In 2021, it was a 20% increase in appreciation over 2020. So that
That's
average,
big.
yeah, over the last couple of years, we know like how high home prices have gone. The other thing that's going to happen to kind of correct what's happening with rates is you'll probably start to see, as you're pulling numbers in the MLS, of home prices, selling maybe at listing, prices being
Mhm.
reduced. I don't know if you're seeing kind of that percentage and tracking that also. It's probably a higher.
Yes. In fact, I did my first price reduction today for the first time in 2 years.
Yeah. Oh my
Yeah,
god. So it's
yeah.
not going to like direct effect, right? It's like you're not going to lower it enough to make up a difference probably of $150 a month in a payment, but
Yeah.
helpful because the lower the sales price, the property tax rate goes down, right?
Mhm.
Mortgage balance goes down. So even though the rate's a little bit higher, you're offsetting that increase in payment. So it's still a good time to invest. I mean, it's still the cheapest amount of money that you can borrow. People pay 23% on a credit card all day long. So
Exactly. And they carry that debt for years.
like longer than a mortgage sometimes,
Yeah,
right? But
exactly.
because the Fed and the news and the hype and we don't talk about 23% credit cards, but people have 10, 20, $30,000 balances on those. And
Right.
you're talking about a mortgage that you could get a tax write-off on the interest. It's still a really low rate of borrowing. It's just sticker shock because people,
Yes.
yeah, people were at a below market rate just last year, just 10 days ago. I mean, it
Yeah.
was lower. But the other thing I wanted to tell you is, now that interest rates have gone up with the agencies, we are looking into, different products when I talk to a client. So we're looking into adjustable rate mortgages, which could be
Yes.
for 5 years or 7 years or 10 years that could have a lower upfront rate.
Mhm.
Also looking at different jumbo options. So usually jumbo financing, we throw borrowers in that product when it's a higher loan amount.
Mhm.
Now though, they're coming out with, hey, if it's like $1 over, the 647, 200 mark, you can look to put them into a jumbo loan, which doesn't have the add-ons of the agencies like Fannie and Freddie to the pricing.
Right.
So
Right.
that's another thing that we're looking to do to kind of be creative and figure out what product is best priced for someone.
Yeah. Well, good. So, is there anything else we should know in the future? I mean, I have been telling people since we've been hearing these interest rates, we're going to be hiking up, early this year. And I mean, this should not come as a shock to anybody. We all knew this was coming.
Yeah.
I mean, inflation. The inflation was driven by the pandemic. It was driven by our stimulus money. It was driven by a multitude of things.
Yeah.
Um, and
It's like
so,
goods and services over and the ships being stuck and production.
right.
Even like car purchases. I mean, it's you're literally buying a car that's going to be made and delivered to you 9 months later. I mean, I've in the history of buying cars, that's never happened where you have to order it and then wait almost a year because of
Yep.
production parts and it crossing, like everything that goes into that. We always took that stuff for granted.
Yeah, we all we had to do was just drive to Kearney Mesa and get the car we wanted, right?
It's,
It's funny you saying that because my used car is worth more than what I paid for it right now.
yeah,
And that just blows my mind. I mean,
yeah.
there was an agent in my office who sold his car for traded it in for $2,000 less than what he had originally bought it for, and it's like a 12-year-old car. It's
Wow.
insane what's happening with
So great.
cars.
People
Yeah.
always ask, oh, is it a good time to buy? And the answer always is, if it's a good time for you, yes. I mean, it's all about affordability. I've been in the mortgage business for 23 years. And when I started, the rate I sold on a first mortgage was 16% with 10 points. Okay. Because
Mhm.
Section 32, there were no high cost amounts. So people are always going to be buying houses. They're always going to be selling houses. It's working with the right team like yourself and me where we can really figure out what's your affordability. What do you feel comfortable with? Are you talking to a tax accountant to see when you do write off interest and you're not a renter any longer, what that does to your paycheck?
Yep.
Your withholdings, can you make more money every paycheck? And just find ways to get people to still kind of live that American dream. And it's happening. I mean, we're still closing loans. Uh,
Yes.
the
Well,
the refi boom is gone, unfortunately, but you know,
yeah.
it'll come back around.
Yeah, well, just like in the recession, people still had to buy and sell homes, and we still transacted business.
Yeah.
I mean, it was happening. It's going to happen in this market, and
Yeah.
I mean, things are going to continue to be busy.
Yeah, and the other thing, people are like afraid of, the market crash and what happened in the past. And I try to let people know that was driven a lot by the mortgage products that were out there, the negam loans and those type of things where right now we're qualifying people, we're documenting all income, all assets, higher credit scores. And because of how much appreciation we're seeing, people aren't likely to walk away from their home. They have hundreds of thousands of dollars in equity. So if anything, it'll be corrected by the prices dropping a little bit. But I mean, I don't see anything where there's, could maybe a recession, yes, but not like where the housing market is completely gone.
Yes, and the other question I'm getting from a lot of people, because they, the forbearance was such a big thing, and so people are thinking, oh, well, because there was a lot of people in forbearance, that's going to cause that's going to cause us to go into this recession. The good news is, or rather, this bubble, this housing market crash.
Right.
But what's happened is everybody has either sold their home, paid the money back, or worked out a new payment plan. And so there's like a fraction of the people that were actually in forbearance that are still on forbearance. And even if they are on forbearance, there's still plans and products out there to help them not lose their home.
Yeah, absolutely. And people are still refinancing. I mean, like what I tell people is when you buy a house, you're sitting on an asset that you can only use either when you sell or when you refi and pull cash out. Otherwise, it's a place for you to live, right? So people have so much equity that you're still borrowing it at a low rate, even though the rate's higher than what you might have. You're still able to obtain cash from your property and use it for an investment property, a second home, future investments. Maybe the stock market is lower, investing in the stock market. So when it goes up again, you're earning dividends. So it's just, again, like that sticker shock. I think of it happening so fast. It's the highest rate increase since 1971 that's happened as it has. So I think it'll calm down a little bit. Always reach out to you or to me, obviously, with questions, and we're here to help your listeners.
Well, thank you so much, Tracy, for coming on.
You're welcome.
I knew this was going to be quick. I just wanted to get this out there because I've had a few people start melting down over the last 24 hours, and I was like, it's okay. Let's bring this down a level. No worries.
And I would say, if they're not locked in, and if they are pre-approved, to definitely go back to their lender and have them reprice, have them give a new payment. I've done that with my clients. And then if they're really freaking out, I would love to talk to them about the lock and look and see, if they don't want to take the chance of what's going to happen with rates and still get into contract, we can look at that option also.
Awesome. And how do people get in touch with you?
Well, you could Google me. I'm everywhere. No, just kidding. I call or text. It's 858-336-5200. And of course, you and I have a great relationship. So if you reach out to Chris, he'll refer you to some good people on his team, and I would love to answer any questions that anybody has.
Awesome. Thank you so much, Tracy, for doing this. I appreciate you.
Welcome.
I will talk to you soon.
Bye.
Bye-bye.